Tesla that I made in August. In my playbook, this is the higher time frame breakout play, and the give and go pattern is the specific pattern, intraday pattern in which it manifested. This trade is significant to me to study because it offers an opportunity for me to work on my goals. So there are specific things that I want to be working on the most, and this play exemplified a lot of those aspects. Number one, find intraday inflection points as a way to add size. That's been an important focus for me for the last month and a half specifically. It's something I've been studying in more detail. And this trade offered an intraday moment or two where I could really recognize that it was working, add to my position, even perhaps against a closer stop, and even on a swing trade idea, begin to get bigger with tighter risk. The second point, overnight holds on higher time frame breakouts. This is a goal that I've had coming into this year because upon studying a lot of my higher time frame breakout plays, I have seen that I have basically been catching day one of a lot of these breakouts that in bull markets go on to make big moves. And so I wanted to improve on capitalizing on those plays, on those entries on the higher time frame and holding them overnight. And that could be an overnight hold for a gap up. That could be 2 to 3 days, or it could also be a longer swing trade. Number three, long-term account swing trade. So that's an extension of what I just talked about, but using my long-term account to express these longer ideas that might last 2 to 3 weeks. And then number four, risk more and trade bigger in my best setups. And so this qualifies as a best setup. So this gave me an opportunity to trade bigger and then go back and study how I could have traded bigger. You know, there were areas where I think I did really well with that, and there are areas where I could have done way better with that.
What's interesting about this is I really like how you are incorporating your longer term goals with a specific trade. And Dr. Steenbarger would highlight your work as world class in terms of consistency. So there are stars at the firm that we talk a lot about, but there are also rising stars that we don't really talk a lot about who are in their own right showing literally, in Dr. Steenbarger's words, world-class results, world-class consistency. And they're not yet the big names at the firm, not yet. And maybe some of you guys who are going to watch this as Garrett presents are not yet. You know, some of the big producers at the firm or people who are watching this at home, not the big producers you have in your own trading. But there are people out there that are doing just tremendous work that we need to be learning from, that are going to be the future stars, that are going to be the future stars of this firm and elsewhere. And their work is clearly showing that, and we need to be learning from them. And so you're one of those people, Garrett, and this is particularly interesting, and I look forward to watching back this tape in a couple of years from now and seeing where you are then. And this is the work that you're doing right now to sort of get to that point where you are reaching your goals. So sorry to cut in right there. Let's talk a little bit more about the trade.
Overall big picture. So this is just the view kind of coming into the trade, what I'm thinking about the overall market. And in this kind of trade, this really matters. So tech, especially large cap tech, has been heavily in favor. So that's been the leader. The Fed's massive stimulus has been the justification for the relentless rally off the March lows. Not that everyone expected it, but that seems to be the narrative in terms of explaining it. And breakouts have been working. And that sounds super simple, but that's really important to me, and that's something that I always need to be keeping tabs on, because sometimes there are environments where breakouts are not working, and sometimes there are environments where breakouts are working. And the way that I keep tabs on that is I just look at really good setups, and if they're not following through, then that's a really good indication that something might be changing in the market. And if really good setups, breakout setups are following through, then that's information. And so this is an environment where breakouts have been following through. SPY is at or near all-time highs, so of course, we have a lot of people saying it's up too much and it needs to pull way back. And then we also have a lot of momentum to the upside. So the way I look at that is I want to be trading in the direction of the tape. And I really want to be keyed in on the fact that prices are moving higher and the breakouts are working. But also in the back of my mind, understanding that at some point something will change. And I also need to recognize that shift in the market, which we had about a week ago.
Yeah, and from my seat, I've been listening to people say that the SPY is too high since 2012.
Right. Yeah. And it seems like, if you just go back to the 1920s, the market mostly goes up. So I try not to get too biased when the market is trading higher. I try to believe the tape the best I can, especially when breakouts are working and these setups are working. And again, that's all with the caveat that things do change and markets do shift, but I should be able to recognize that. I shouldn't have to anticipate every step of the way that shift. I shouldn't have to try to pick a top, and I shouldn't be swayed from taking my best breakout setups just because the market's been rallying for a little bit. So
yeah, and eventually we'll have a pull-in or a correction Right now, we're not seeing that. What's paying, as you're mentioning, are certain patterns. One of those patterns is breakouts. We're observing that. So that's our job, is to observe what's working and to find ways we can express trades that are working in markets.
Yeah, and the last point, which Valley you just touched on, is just that as the market climbs higher, more people doubt the rally and expect a market pull. And so sometimes that can add fuel to the fire. So if you're watching SPY and you see a liquidation break, that looks scary and it closes at the lows, but then the next day we get bought right back up and it's business as usual. You can kind of put a little bit of that narrative together and understand that short-term traders might have just been washed out. That little extra jolt of fear in the market might be enough to fuel, a next little up move in the market, a next round of breakouts, and just more information that this may not be ready to crack.
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So the short-term big picture, and again, this is just the last few days and just kind of what's been going on. And so SPY underwent a swift liquidation break the prior day after making an all-time high, which spooked the market at the close. So that's basically what I was just explaining. So the previous day, if you were really zoomed in on the tape, you might have been extra cautious, maybe a little bearish, thinking that we just made an all-time high and then we just sold off pretty fast and closed at the lows. So with Tesla over the last few days, Tesla broke its daily chart wedge to the downside and closed weak, right at support on this prior day. So Tesla's been consolidating in a tight range. It's been holding up. It showed relative strength on a vicious up move and then went sideways for about a month. And the previous few days leading up to this trade, it started to break to the downside a little bit, and it closed weak on the same day that SPY had its liquidation break. So again, we have kind of a short-term bearish look to things leading into this trade. And after the close, Tesla announced a 5-to-1 stock split, and the stock gapped up 7%. So that's the catalyst. That's the impetus for this trade. Intraday fundamentals, the stock split, that was it. And it was, at this point it's August 12th, and August 28th is when the split will occur. And I think it's important to mention for me when I'm making this trade that it's not so much the fundamentals of a stock split that get me excited about this catalyst. I'm not thinking to myself, this is a changing fundamentals play. I'm not thinking, wow, this is going to add value to the company and long-term investors are going to pile in and this is a total game changer. I'm just thinking that we have an A-plus technical setup here and the stock just needs an excuse to start the move. And I thought that this could be a really good excuse for a number of reasons. One, stocks have a history of reacting bullishly to stock split news, and that was exemplified a few weeks earlier with the Apple stock split, which started that on a run. And so again, if we're just looking at themes in the market, we're looking at large cap tech has been running, and Apple's been leading that with stock split news. So that's how I saw this catalyst. So we have the ATR, again adjusted for the split, 75 million average volume. The R-vol was about 3. It wasn't crazy on this day, but it had been, this stock's been in play for a while. So sometimes when a stock's been in play for a while, the relative volume, it gets adjusted for that. Short float about 10%, fluctuates quite a bit.
I'll just have my 2 cents here, which is, to me, the catalyst for this particular trade was, because the stock splits shouldn't mean it should trade higher. That isn't a reason why a stock should trade higher. I would add a caveat that maybe it is in a strong market because Tesla was so expensive and now it's going to be a little bit more affordable for some of the retail traders to buy some, so maybe that's a reason. But we actually hadn't even split yet. The stock was still going up with Tesla being so expensive. So it's almost like the catalyst in this case is it's going up for a reason that doesn't really make a lot of sense historically. That shouldn't make a stock go up, but it is. And anytime you sort of see something that doesn't make sense, but it is, that catches my attention. And the other thing you mentioned, which I thought was super important, is what did Apple do when it split? What is the pattern in the marketplace, which is when these stocks have split, they have traded higher. That is the pattern. And so this is another example of that. Those are the 2 things that stood out to me.
Yeah, that's great. And Tesla also had some other potential catalysts on the horizon, which they didn't need to come to fruition because they were on the horizon and we're talking about now. But just the whole storyline of the stock, like I said, I felt like it just needed an excuse to trigger this technical pattern. And if it did it on elevated volume because of this, then that would be enough.
No, and I like that idea. It just needed an excuse.
Yeah. So the play and the setup for me, and this is just important for me in my trading and how I think about things, in order to define this, in order to define what this is, and be able to repeat it, to be able to understand it, to be able to understand what I'm looking for, both in terms of context and in terms of the intraday pattern that's going to serve as a vehicle for me to get involved in this trade. So this is a higher time frame breakout for me. And so these plays for me, my objective is to capture the momentum and the range expansion created by a breakout from compression on the daily chart in a relatively strong stock within a hot sector or theme or an individual catalyst. So sometimes this is purely technical and sometimes it involves a catalyst. But either way, I want to see elevated R-vol on the day one breakout. And as we can see in this trade, this can be an intraday trade and a multi-day swing trade, depending on how you see it. And so the intraday pattern for me in this Tesla trade was the give and go pattern. And that's just a name that I've given this particular pattern that I've seen repeat itself in other stocks like AMD and like Apple when they have a catalyst that causes them to gap up. And so the idea here is that after a gap up above or right to a higher time frame breakout level, the stock will pull in and hold shallow enough, and that's really important, in the morning to maintain the energy to take out the intraday highs by 10:30 or 11 and trend higher. So I want to be buying this pull in, and I want to be adding as it confirms and sets up to break out and trend. So just really quickly, I just want to highlight what made this Tesla trade special, and we've mentioned a few of these things, so I'll just go over it quickly. But at the time of the catalyst, Tesla was already compressing on the daily chart and exhibiting a lot of relative strength. So it held this level for a month. So this was unusual sideways action on the higher time frame. So when I see a momentum name like this, they can't pull back, and then it kind of goes to sleep, and then it wakes up. That's a big lookout for me. The catalyst came at the apex and support of this compression pattern. So again, it just couldn't have come at a better time technically for the stock. And so, as I said before, Tesla just needed an excuse to break out of this pattern. It had other catalysts on the horizon. Apple had reacted well to its stock split news a couple weeks before this, and there was a shakeout in the Tesla pattern prior to the catalyst, which is something I like to see on all time frames, because it's almost like a confirmation that it can't go down, or it might be something that traps shorts. It might give you a better stop, those kinds of things. The intraday price action followed script and acted very well, and then the domino effect, which is becoming more and more important to my trading, and this is just a thing that I see a lot that helps me get really good risk reward in my trades, and I just call it the domino effect. And basically what this is that an intraday pattern risk, when it follows through, can cascade into higher time frame reward. And so you might have a big picture context play, but you might see a lower time frame intraday pattern that you think is going to trigger momentum. And so you can enter that trade with smaller, lower time frame risk, and if it does happen to trigger the higher time frame breakouts, then perhaps the thing continues and actually gives you the reward of a higher time frame trade. And so to me, that's how I see how to get these like 5-to-1 or 10-to-1 or some of these really good risk reward opportunities. So this is why I want to find inflection points on both the higher time frame and the intraday time frame. And so this Tesla trade was really a multiple time frame breakout play because it was kind of triggering on all time frames at this point. And so I want to see Tesla hold the gap. If it gives up the gap, then to me the catalyst is not triggering the breakout and my thesis is invalidated. So I want to look for one of my intraday patterns to serve as a vehicle for getting involved. And the reason why that idea is powerful to me is because if I just go in at the open and think that I just want to be buying the stock because of this catalyst, and it does start to sell off at the open and it does start to give up the gap, what am I going to do? Like, how am I going to see how to control my risk on a lower time frame? How am I going to time this? Am I just going to keep buying it at all different places throughout the day? And so in order for me to be patient, I have to know what I'm being patient for. And so that's what these intraday patterns really help me with. So I want to see the price action in the tape confirm my idea intraday. So I want there to be clues. Like, I want price to hold higher. I want pullbacks to get by. I want there to be lots of order flow, because these are the things that happen when one of these higher time frame breakouts are working. The ultimate confirmation would be for Tesla to take out its higher time frame breakout levels on elevated R-vol and close above these levels. And so these were a little bit higher than where the stock started on that day, but on a higher time frame, this is what I wanted to see in order to hold the stock overnight, in order to give the swing trade a chance. And so the key for me is that I need to maintain a higher time frame vision while executing this idea on an intraday level, because this is an intraday trade and a long-term account idea. And this is just a note that for the charts that I'm using, the split had already happened, so everything's adjusted for the split. So it's the price divided by 5. So here's the weekly, going back a year, and we can see the breakout at 1,000. It's 200 on this chart because of the split, but that was the breakout at 1,000. Very strong relative strength, and then we see the bull flag. So on the weekly, that's a bull flag. That's the consolidation on the daily chart that I'm talking about playing here. So here's the daily chart. So we're just zooming in on that flag, and the thing that I just want to draw attention to is the 2 days prior, we start to break the bottom of that wedge pattern, and we close near the lows on the previous day, right at support, and then the catalyst occurred. And so that's the shakeout that I'm talking about. And so I like to see that sometimes, even intraday. If this were an intraday pattern and I wanted to buy this, if I saw that and then saw it reclaim, to me sometimes that's even more confirmation of the long. And so just zooming in on that consolidation, I just want to draw attention to that 303.50, 301 area that I had acknowledged as the initial breakout level that I wanted to see it clear on a higher time frame. That idea is amplified by the fact that that's where most of the volume's been done over the past month. And you could really see that on the volume profile there, how much volume was done around that 301, like almost all of it. And so if we can get back above there and hold, then that would give me more confidence that this trade is working.
That's a great use of the volume profile right there. You're using it alongside of a daily chart. You're using it alongside of a tight wedge pattern daily chart, which tends to have big moves after it breaks in one particular area. But I really like how you see a very clear level by using that volume profile with this particular setup. I find that to be particularly well done.
Great. Yeah, I love it. I think there's a lot of information in the volume profile. It's not something I overanalyze, but sometimes when very simple, big things like this stand out, they can really serve a purpose in the trade. So here's SPY. It's been on a really big run since the March lows. And you can just see that previous day candle, that red candle there, was the liquidation break that obviously did not damage any technicals on the daily chart, but intraday, it looked a little nasty. And so here's the week leading up in SPY, and you can just see the previous day. Again, you see that liquidation break at the close. We gap up to all-time highs and then completely fail into the close. And so if you were looking for this bull run to end, if you were already bearish, if you thought this was up too much, that might have been something that got you excited about the short. And then we walk in the next day and SPY completely reclaims the level. And we know Tesla's gapped up as well. So this all to me kind of plays into that shakeout idea that I talked about earlier. And so here's the week 5-minute chart of Tesla. And again, you can see the last 2 days start to drift lower. And then we get the catalyst and we gap up. And so when I look at this, what I'm kind of asking myself is, is the control shifting from the bears to the bulls here on a short time frame, like over the last week? Like, are those bears that might have gotten excited over the last couple of days, are they trapped? And are the bulls taking control back? So the give and go pattern, and this is what I was looking for as we opened. And so I'm just going to outline this a little bit, how I think about it. But we get a gap up on the catalyst. And like I said before, it gaps to or above the breakout level. Develops a range in the pre-market. And so the preparation for me, what I want to be asking myself, if there's a possibility that we might see this, is where do I want to pull in to hold? If it does pull in at the open, like where do I not want it to be trading below? And the reason I ask myself that is that there is a point where if it pulls in too much, there's a lower probability that it's going to have the energy to reclaim, break the highs, and trend all day. So what's the powerful pull-in level? Watch the tape at the potential turn. When it is pulling in, does anything change? Is there absorption? Do aggressive buyers come in, which is what happened here? Does the speed of the tape change, which is what happened here? And then confirmation. So after it breaks the trend line off the lows, can it hold higher? Can it reclaim VWAP or a significant intraday level? Is there a big time moment that I can recognize where I'm going to want to add swing size against the low of day? And I really wanted to take out the highs by 10:30 or 11. I mean, that's the most powerful version of this for me. So here's the 2-day chart showing the gap up in the pre-market action. And this is just to show how I figure out where I want it to hold. So we have the after hours spike and then it goes sideways. And my thought process is usually I don't want it to give back more than 50% of the move. And if it can hold like a third of the move, then that's really bullish. And so it just so happened that 287.20 pre-market low level that I have highlighted there in black, right here, that was right between the 50% and the third pullback. So this shaded area with this particular pre-market low level was the area that I'm looking for a pull-in to hold. If it starts holding below here, then I'm thinking it's giving back too much. Like, this isn't nearly as powerful as I want it to be. And that way, if I make the play, it has a potential of being powerful. And if it does go down, then I can stay uninvolved. So here's the morning pull-in. And this kind of happened in 3 steps, and there were 3 places where I bought it. So it pulls in, and then I see the tape change right at this 287.20 level. It took it out by 20 cents, held 287, and then the buying came in. And you could see that on the tape, it was a little more aggressive. But it might have looked more like this one too, over here on the left, and you can see that this failed. So the next thing I really want to see, which it hasn't done yet, is I want to see after this up move, I want to see it be able to hold higher. Because it didn't do that over here. So that would be a change of character. So the first clue was here, when it held it higher for the first time and then broke up. And then I thought this was very significant, when it held 290.50 unusually on the tape for 7 minutes. I mean, this was just a really strong hold. So much so that I think it would have been viable to buy this with a stop below this 290.50 for a portion of the position in order to get more size and see if it can break the highs. And I think it is important to keep in mind too that I'm thinking of this as an intraday trade, but I'm also thinking of it as a swing trade. And so this is one of the things I'm working on. Like I need to be risking enough so that I have enough size to express both trades. And so I'm buying some in the long-term account, I'm buying some in the intraday account, but ideally, I'm acknowledging this in real time and really putting the risk on here.
Yeah, and a common theme with something like that after a little bit of a down move is when you start to see the stock hold. So go back to that chart. So, it sells off a bit much, pulls in a bit much, starts to trade back up, then holds higher for that first time, and then holds that 290.50 area unusually. One of the things that you need to fight against, and one of the reasons why doing a playbook like this is so helpful, is to make it easier to buy that 290.50 level. It's so easy to sit there and say, I could have bought this a lot cheaper. I think this needs to pull in a little bit more from that 290.50 area, or else it's too expensive. But when something starts to turn around and starts to catch a bid, lots of times when you go back and study that pattern, when it's holding higher unusually, and when it's holding higher unusually at a price that strikes you as too high in the near term, that's a signal. That's a very aggressive buy signal. That's a signal that not only is there a buyer here, but there's probably going to be a buyer that continues for a while. And so easy to sit there and be like, oh, this buyer's too aggressive, let me wait for it. No. You actually should be thinking the exact opposite, which is he's buying up here unusually, and he's buying up here unusually at a price that's too high because there's a big order to go here. And I want to follow, and I want to be adding even here. And so when you're seeing that unusual buying, that's different than chasing. That's different than not being patient about price. That's the exact opposite. That is good trading. That's good adding. That's good seeing it. When you talk about those moments, it should really work from there.
Yeah, I couldn't agree more. And the only way that I can get it through my head in those moments is to go back and study these and see that, because that happens. And after everything's all said and done, you can go back to that moment and see it in the context of things and experience it again and realize what the reward is too, in terms of where you think this can go. We're not just looking for like a test of the highs. This isn't a scalp. Although that moment could have been. If you're a scalper, I still think that could have been a great trade. But yeah, I couldn't agree more. It's really important. It's something I'm working on. I added there at that time, but I probably didn't add enough. And I think one of the difficulties for me is that I'll say to myself, I've done such a good job so far of buying this thing, and it seems to be working, and I don't want to mess up, the good trade that I have on that I think I can fully realize here. But the more you see these, the more you realize it is working, and I have to be adding here. Here's a chart that just goes up to 12:40 in the afternoon, just to show the confirmation that it was showing after it took out the highs. So, we see the 3 buy points right here, and it did take out the highs, and it did have a nice up move, and it did have a pullback that held this minor pre-market level, and then continued higher, and took out the pre-market high, tested that volume level that we looked at on the 30-minute chart, and came back in and held the pre-market high. So again, every pullback is getting bought so far, and VWAP is rising, and our prices that we bought at are getting better and better as time goes on. And so this is an example of a trade that's working. This is what I want to see. Like if I did all this work already, and one of the most important things for me to recognize is when it's working, not just when it's not working, but when it's working really well. And this was working really well. So here's the whole day, and this is just to show that even those higher time frame levels that I was looking at were getting confirmed on this day. So this blue level right here is that volume node, and then this other dotted line is just that nearby breakout level. So this is basically the area I'm looking at on a higher time frame for it to break out of, for it to close above, and it does. And when it takes it out, it actually speeds up and gets a little parabolic. And so again, this is just what I want to see when I'm making this higher time frame breakout trade. I want it to take these levels out like it's butter, and that's what it was doing. So the execution on those 3 ads, for me, one of the keys to maximizing this trade is realizing when I can be trading against the low day really well, and then when I can be trading against a higher intraday level safely. And so the question I'm always asking myself is, when are these stops really, really good? Like if it takes it out, I'm probably wrong. Because at that point, it allows me to put on more risk against those levels and still really give the trade a shot. And so for that first buy, I want to be adding tier 1 on that change of tape and the trend line break. And then when it finally holds higher, I want to be adding, because at that point, now I'm thinking, now this low of day is a much better stop than it was before when I bought it based on the tape. And then we just talked about that unusual hold, and that's where I want to be buying there. And I think there it is safe to be trading part of the position below that level, because that really should work. And so then I want to just take 25% of my position and scale at certain intraday extensions for the intraday trade, and then hold 25% overnight. And this is the idea for my intraday account. And then there's also the long-term account that has a position in it that's for a longer swing trade. And so these are the extensions, and sometimes it's never as perfect as this. Sometimes you're taking that 25% and you're scaling it, slowly into that extension. But the idea is to, I don't want to find myself out of 75% of my position by 11 o'clock when I had a much bigger idea for this trade. And so that's why I want to be thinking about this. And so here's the daily chart just after the fact, just to drill into my mind, what kind of trade this was. The idea of when you're executing that morning and you're seeing the potential of this trade, why it's so important to put the risk on, why it's so important to be okay with risking against the low day for a swing trade, why it is okay to be holding positions during pullbacks, because we're really thinking on a higher time frame here. So review the trade. For me, this is a future 7-figure trade, so that's why I need to be reviewing this as much as possible with as much detail as possible. And just one of the things that it makes me think of is just as skilled active traders, we have a huge advantage in executing higher time frame ideas. And the thought process there is just that we're not just trading off of a daily chart pattern. You could be a guy who goes to work at a sales job and puts on some swing trades, and maybe you see a good close, so you go in and put a position on at the market in the morning, and you've got to stop based on the daily chart, and that might be a great trade, it might be awesome, but you don't have the ability to read the tape at key moments at 10 o'clock in the morning and really understand when you can trade your position against low of day and when you can make a momentum trade, and when there's an unusual buyer. And so those things don't only come into play when we're scalping, they also come into play when we're executing swing trades. So I need to be big enough in this trade in order to trade an intraday, 2 to 3 day swing, and also a potential multi-week swing trade. So I was able to accomplish this trade on all those time frames, but I can be bigger in the trade. So the way I can get size in order to trade it on multiple time frames is to use the intraday pattern risk for the swing portion of the trade as soon as I recognize I can safely trade it against the low of day. So the biggest mistake that I made and that we made in our joint account when we put the swing trade on was that we were making a longer term play here, and we had originally been trading it against the daily chart low, basically against the previous day's low. We had a little bit of a position and we added to it on this day. But there was a point in this day in the morning where we could have said, we now can trade a large portion of this trade against today's low because this trade is working and it should not stop working. And therefore we can get much bigger in this trade that eventually basically went up 1,000 points.
I'm sure you've been working on this trade a while and you keep talking about how it's working and you feel more comfortable. How long would you say you were really working on this setup until you could really recognize those areas that said it was working for you? As someone who's really developing my strong setups or what's going to work best for me in these first months, I'm really just trying to, see what works for you and maybe how you really noticed what's working for you.
Yeah, no, that's great. That's a great question. It's a gradual thing. It's not something that was happened overnight kind of thing. But I would just say that you start to see it on the best trades first. It's hard to see it on mediocre trades. But when you get involved in the best trades, like a trade like this, or a few others come to mind where it was just a serious breakout and there were a lot of things going for it and you can really see it on the tape, I think that those experiences are really valuable. And you can't force it because you might not be in a market where that's happening, right? So if it doesn't happen for 8 months, you can't blame yourself for, not getting the experience of seeing that and getting better at recognizing that. It's just that when it does happen, then it's really worth paying attention, I think, and it's really worth going back and looking at the play, but also watching the tape in real time. I'm not scalping in and out of these things. I might be playing a bigger picture play, but I'm watching the tape like a hawk, while I'm sitting there all day. And, after a while you can really get to see what the difference looks like on the tape in something like this that just has a bit where the pullbacks, every pullback is getting bought back up and there's just a lot of order flow. And so that's what I would do, is just in a market where these things are happening, just try to watch the tape a lot.
Yeah, that makes a lot of sense. So kind of just waiting till a setup that does really make sense to me just kind of shows up in front of me, and then I know that's something to look out for in the future.
Yeah, exactly. And one of the things I do is I like to go back and look at the best plays ever, the best plays of all time. That makes sense.
More personal.
Yeah, I might not even have traded. Maybe I totally missed it, but it could be something that makes a lot of sense to me. But they're the things that I think are the best trades of all time, right? And I'll go back and I'll look at like how did this happen? What did it look like when I should have been buying it? And you start to notice things like, you know what? None of these pulled back at the open more than 50% of the move, right? So all of a sudden you start to put together things like if it starts to do that, is this really going to be one of those special plays, that kind of stuff? And also, okay, all these special plays, after it started working, they all kind of acted like this, and then you start to just connect the dots and get used to how these things act, how they look when they're really, really working.
And then I actually just have one more smaller, more just technical question.
Yeah.
What time frames do you like to use that volume profile in, and do you ever use it for intraday trading?
Yeah, I have it up on my intraday chart. I kind of have it on all my charts, and I don't always pay attention to it, but I just have it there. So
Right. Yeah, just another check if you want to.
yeah, and so I would just say that when I use it the most is when I have a question that I'm trying to answer. So if I see a consolidation on the daily chart or a consolidation over the last week, and I'm wondering, like, can it break out of this consolidation or can it break down? I might want to look inside that consolidation and just find out, okay, like, where's the most volume been done? And that just gives me an idea of, like, which side of the bull bear scenario is this thing trading? Like, where might it have to hold above or below in order to make a move? And it just gives me a little more information as to, like, where's the equilibrium within this consolidation.
Cool. Yeah, I was thinking about kind of using it in a way, looking at previous days' levels and just seeing those volume profiles, where those levels were for maybe an opening drive the next day or something like that to help give
Yeah.
you something on top of just pre-market levels.
Absolutely. I mean, a lot of the stuff that I look at is from the previous day. So that would be a good example. Like, I might really just want to know where the most volume was done on the previous day, just to give me an idea, another piece of information in terms of, like, for example, like, if I'm thinking I want to go long something today, and it's trading below its volume where it did the most volume the previous day, I'm gonna be a lot less confident that this is an idea that's playing out for me, that this is an idea that I want to be putting my energy into, right? Because it did a lot of volume somewhere yesterday, and now it's trading below there. So, like, why would I be thinking this is going to be the best long of all time, unless it can reclaim it? And so just stuff like that. It helps me be more selective sometimes.
Thank you so much for this, Garrett. I was going to ask you, like, what are some things you did to help get better at reading the tape?
Man, that's like, it's such a good question. I mean, it's like the golden question. I get asked that a lot, and the only thing I can say is just watching the tape a lot. Because when I started, I didn't know what I was looking for in the tape. Like, I'd never looked at the tape before, and I would wonder, what are other people looking for? Are they reading size on the tape? Are they looking for particular, bids to drop and stuff like that? And what I realized over time, at least for me, is that the tape is such a dynamic thing, and there's like such a flow to it, that rather than getting caught up in thinking about very specific things that I'm looking for, I try to zoom out a little bit and just get a feel for what are the prints. So what were the aggressive buying and selling? What are they doing to the bids and offers? Like, how much are they able to accomplish? And so that sort of battle that you see there can sometimes give you a lot of information, even if you're not looking for a trade. So, like, if they're really, really, really hitting the bid all of a sudden, and the tape speeds up, and there's volume, and there's a lot of red prints going off, I'm wondering what's going to happen to that bid. Does the bid just drop out and the next one drops out, or does the bid hold, or does the bid drop and then rebid and refresh? And is there someone there, absorbing all this kind of stuff? And so as soon as I kind of started to look at it, like, the prints were kind of like this water pressure, and the bids and offers are kind of like a dam. And it's like, can the water pressure break the dam? How strong is the dam? Like, that kind of feel. I started to glean a lot more from the tape, especially at the inflection points that I care about. So, like, if there's a chart pattern and I think we're at an inflection point and I think something should happen, then I can look at the tape and kind of see, like, how are the bids here? How's the aggressive buying and selling here? Is the tape confirming what I think this chart pattern is telling me? So stuff like that. I hope that answers your question. At this point, I kind of forget what you asked about the tape, but
No, that did. Yeah, I'm definitely going to start working and looking a lot more into prints as well. So thank you for that.
I had another question about potentially your like nightly process for generating ideas the next day. Do you have like a basket of stocks you like to look through, just whatever's been in play and popular recently, or like indexes, or just trying to figure out better ways to brainstorm more ideas when I have free time to bring to the market?
Totally. Like, the first thing I always ask myself is, what kind of environment are we in, and what has been working? Because I have different plays for different environments. And sometimes low floats are hot and the market's dead and there's no volatility. Sometimes the market volatility is high and we have, like, market stocks, and we have VIX. Sometimes we're just in a bull market that's kind of holding higher and a lot of breakouts are working. So the first thing I want to ask myself is just, like, what mode are we in, where I can sort of dust off the correct plays in my playbook for the next day. And obviously that can change as soon as you wake up the next day. But so that's the first question I ask. And then from there, I'll have a basket of stocks that I'm watching that have been in play, and then I'm really just waiting to see what has fresh news. Like, so every night I go over charts, look at the SPY and the Qs and stuff like that, and just kind of get levels, get a feel for the market, go over the basket that I follow, same kind of stuff, go over anything, maybe like a second day play, maybe something was in play the day before, and just get a feel for everything that I already know about. And then just realize that when we wake up, there might be something new, and that might be the best thing for that day. And then the other thing I do a lot, which I just can't stress enough, is, like, I get on the phone with people. I mean, especially in this environment where, we're all, a lot of us are remote. But I might get on the phone with some fellow traders and just say, hey, what do you see? And sometimes doing that the night before actually becomes very valuable, because they might have a good perspective that you didn't think about, and it might get you thinking. And I just know, for me, if there's something really good setting up and I can visualize it like the night before and actually be that much more prepared, then that can actually make a really big difference, because I might be able to, it might start to make more sense to me over the course of, like, 5 hours of, if I'm sitting there watching an NBA game, in the back of my mind I might be thinking about this setup. right? And after a few hours, it might start making more sense to me. And so, talking to other traders to me is really big.
Talk about really quickly why you're watching the QQQ ETF, because people may be watching this at a different time, but March 17, 2022, I think the last 10 trading days we've had an ATR of like $9 or something like that in Qs.
Exactly, and obviously, I think this is something that is quite known within SMB. We are, of course, focused. It's a trading company focused on stocks in play, and that remains the core part of the business. However, there are times where really most stocks react based on what the market is doing, and I think that even going further behind the past 10 trading days, we could say that, at least my personal opinion is that we have seen this throughout 2022. We have seen massive movement in the ETFs, in the indexes, which is a good opportunity to trade the whole market. And when I say the whole market, when you trade SPY, when you trade Qs, or even IWM, basically you are trading the market. And this is a good opportunity because these indexes and these ETFs, they are very well priced. The bid-ask spread is very low, so it's a good opportunity for traders to trade these stocks because, as you say, the ATRs are maybe 5 times higher than what we have seen last year at this time, or especially, for example, if you take the summer of last year.
And between the liquidity, you can get in and out with essentially as much size as you want. With the spreads, as you pointed out, these are just essentially stocks in play. And so we try and find the price patterns that make the most sense to us. And that's what we're here to talk about today, pattern identification. So let's see this unique pattern that we kind of had a little fun with in naming, but kind of show it to us and then we'll talk about it.
It is funny because I decided to call this the Space Invaders pattern because of the resemblance to a character of a very, very old video game. I'm sorry, some of us are a bit older and used to play these kind of games when they were really when we were kids. And this is interesting because I have seen it, as I will show it to you. I have seen it on the daily chart. I have seen it on the 30-minute chart, and even on the really small time frames. And I have to admit that the reason why I discovered it is that, unfortunately, I got burned a bit of a few times. Why? Because this pattern, this is an example on in February of the SPX. What you can see is that as the index or the stock is really starting to bounce, people start to look for long positions, taking a long position, and this usually happens when the downtrend is broken. The thing with this pattern is that the moment that you tend to believe that the downtrend is broken, for example, let's say that you have seen SPX go up 4 days in a row and you plan to wait for a few days to see some form of pullback. And when the stocks pull back and let's say you have a downtrend that goes like this, a mini downtrend. So here, when you see now we have broken the mini downtrend, we have held the 10-day moving average. The yellow thing is the 10-day moving average. The green one is the 20-day moving average. So things look good. Things look like they're going to now continue up. We have two averages. The 50-day is still a bit far. And then what happens is that you get the straight move down, and not even a straight move down, then you get also continuation. So let's say that on the 5-minute chart or on the 1-minute chart, when I try to do this, and this is something that I often do, I got burned a few times, and then I said to myself, well, look, this looks like a
character from Space Invaders. And you literally told us that, and I kind of laughed. But every time I'm looking at a chart and I see this pattern, it reminds me, and now it's an opportunity. It's no longer a threat, it's an opportunity. And it's actually a really good opportunity that we've seen play out a handful of times with very, very meaningful results when you trade it the right way. So hopefully you have a couple other examples that we can see real quick, and we can talk through how we've been talking about the way that we want to trade this pattern.
I do. So just a couple of words here. I just wanted to mention that this like what happens is that when markets change, patterns tend to change as well. So then you need to look for what is worked, because what was working before is not working anymore. And the volatility brought this a new bearish pattern. This one, of course, in the end, it's a fake out. It's a double topping pattern, but I call it a fake out because often what it does, it creates a higher high before reversing, and this is really what is confusing and can catch traders on the wrong side. Here's an example of 30-minute charts on the QQQ ETF or the SPX index, and you can see on the left side the chart is from March 8th to March 15th, and as you specified, Jeff, it's in the past 10 days we have seen this a lot, and you can basically see how it makes a higher high than the one 2 days before. And I would guess that on this particular day, when people saw this downtrend break, they went long. Then some people, maybe when they saw this huge bar up, maybe they could have added to the position, because then they told themselves that we have a higher high now, so we may move up, and then it goes straight down. And what's interesting is that the moves are really, really sharp on the downside. It's very difficult to let's say that to find the right entry. So sometimes you just, if you want to get in, and I'll get to that, you really need to take it when you see big down bars like this and with high volume. On the right side is the SPX chart from February 1st to February 14th, and we have the same like double topping pattern. This middle part is always confusing because we often talk about head and shoulders pattern, but this is different because it's like it's a double topping, but there's nothing really in between. So this is what gets people confused, because when you have this kind of consolidation and then we break out, then I mean, at least I am tempted to take a long position, and you could have done this if you only did it for like 1 day here. But if this was a swing position, then it definitely would not have worked, because then we moved straight down.
No, those are great, and you know, it's fun. It's really interesting to see them, as you pointed out, on all the different time frames.
Exactly. So this is a 5-minute chart from March 14. I'm now getting into examples intraday, and it's also an example of how you can play it. We are starting. You can see the day extremely strong. We break above moving averages. This is a 5-minute chart, so we break above moving averages. We break and close above VWAP. So then you may tell yourself that, okay, this is going to be an uptrending day, and I'm going to look for long positions, like maybe on a pullback to VWAP or to one of the moving averages. So, and that seems to work until we get close to the previous high, but then boom, again, vicious and extremely violent down move with very little retracements. So you can see that even these retracements, and I think you can also think about the kind of environment that we had with a very news-driven environment, where news about the war, about the invasion in Ukraine can completely change the market. But again, the pattern is already there. We move down, we move up. It seems like we're going to go up, and then we go way lower than initially thought. So one way to gameplay this is to make sure we trade along with the daily trend. So despite seeing this, I decided for myself to only trade in the direction of the daily trend. So only look for short positions in days like this. I know I'm talking about this after a significant rally up, but here is something in a market. I'm talking about a market that has lasted already for a few months. So now the way you can play this is either you play the fail at the previous high. So at the previous high level, which is also obviously risky because then it can shoot up. Or if you want more certainty, you can play the break of the previous of the morning low, as I call it. It's not, actually, the morning low is here, but this is where you can have.
It's the pullback low, right?
Yeah, it's the pullback low. Yeah.
So it's almost where everybody that bought is instantly wrong, and we're not talking about a pattern where it goes up and holds higher for a nice period of time. It spends less time holding up than it did consolidating before it really reverses hard.
Yeah, exactly.
And so, you know, let's talk about where your stops would be in both cases as well, because we always like to talk about managing risk on our desk.
Absolutely. This initial entry, the one up here, is not so easy to define, because then you only have the previous high as a reference. But since we have seen that this pattern tends to go beyond that previous high, then I would normally I would say, okay, let's use the previous high and then we put our stops there. But in this particular case, I will just make a calculation in terms of ATR, and I would use something like 20% of 1 ATR. Since QQQ has, like you said, almost a $10 ATR right now, that would be more than enough to actually use this and make sure that if we go a little bit higher and then we reverse, then we don't get stopped out, because that's what happened in many times. So I would use 20% of 1 ATR and 1 ATR as a target. So then that gives you a 5-to-1 reward to risk, which is quite good actually for a market play.
And let's talk. So that's the more complex and probably the lowest probability version of this trade, because you're probably going to take your stop, way more often than if you wait for what kind of we talked about as the real trade. And so let's talk about the real trade.
I would say that the best entry would be right here when the pullback low is broken, and that gives them a much, like as you said, a higher probability.
Your risk reward won't be as good. It won't be a 5-to-1 there, though, right?
No, absolutely not. But then I would not set my stop already right above the morning high, because that's a bit maybe too far away, and the moves and the volume is quite. So if you really want to make sure you can put your stop up there, but I would put it somewhere around here.
Maybe the high of the consolidation, even like that in that pullback consolidation.
Yeah.
Oh, interesting. I like that idea.
Above this, because if the move is so violent and you also see that there's a lot of volume, I mean, the bet is really on a really hard down move. So then if the bet is that way, then you can use a tighter stop. But if you really want to be sure, then your stop would be the previous high. Again, risk reward would then be 1-to-1, maybe 1-to-2. But then for 1-to-2, we would really need a very big move.
No, that's great. I appreciate you sharing this. This is really cool.
And then again, first target, because we also talk about targets. First target could be the low of day. And then depending on where we are in terms of ATR, your second target could be at 1 ATR, or otherwise you can use levels from the previous day. this is March 14. We go to March 13 or to wherever we need to go to see the previous levels, and then pick levels from there. I have one more on the 1 minute chart. This is actually really like a scalping one, and this is so clear as it breaks above the previous high. So the market starts when everybody thinks that we are chopping around at the open, and then we have a move up, a straight move down again, and then we move up violently again, make a new higher high, and then we move straight down, which is a really, really difficult pattern.
If you showed me the first half of that chart last year, I would think that we closed high of day.
Yeah, yeah, I would say that, for example, here, you would say probably that it's a perfect long entry, right?
100%. It's a great pullback to buy. But now looking at more of these, I recognize where we're adjusting, and we're making adjustments to make better trades for the market that we're in.
Yeah, yeah. And as I was preparing this presentation, this is today, the SPX.
An inverse Space Invaders, huh?
Yeah, and it looks like it's almost like, look how symmetrical things are, right? So you have this, you have this, you have this, and then you have this.
If we start to see more upside, maybe this is going to be the new trade. We'll just have to know which direction to be, whether we're going to be Space Invaders or an upside down Space Invaders.
Yeah, but it's really crazy, I think, how it's so symmetrical, right? Like this day on this day, and then this right in the middle.
The consolidation, and then it looks like we're going to go to new lows, and we don't, and all of a sudden we're back up at highs. It's a great high volatility market pattern for sure.
Yeah. So yeah, again, like any other type of pattern, this is not to be used okay, this is certainly what's going to happen. There's a lot of other things out there that one needs to watch. What's the news? Like we had the Fed day, obviously. What else is happening? What the volume looks like. So, but it's really interesting to see some of these things because they tend to repeat themselves. And at least if you are to take a long position, or in this particular case, a short position, it kind of makes you wonder, and maybe you are even more careful than with the stops and the way you are managing risk. At least that's what I'm doing.
No, and it's great. I really appreciate you sharing this. I appreciate you having the gumption to call it out the other day. I know it was a little bit of a sheepish call out about the Space Invaders, but I hope it's a point of pride, because being able to recognize something like this and adjust your trading accordingly is a huge skill, and it's something that'll help you grow. We were talking earlier with another trader, and it's not about I found this pattern and it's going to work every single time. It's the process of finding patterns that are working in this market. And the market's always going to change, and you're just going to have to find new price action patterns based on that. But that's sort of the fun that we have with trading, and sort of the joy of this is, when we can bring some playfulness into it with the Space Invaders, that makes it even better. But recognizing what's working in this market and recognizing how to adjust from it is a really good skill. So thank you very much for sharing this today.